Today, we're going to go ahead and check out the details below in the oscillator. The oscillator is going to go ahead and show us whether we are seeing positive or negative divergence. So, quick lesson on divergence. Divergence is when price and momentum disagree. It means that price is moving up, but the oscillator is moving down. When they're diverging away from each other, and it could be converging or diverging, we have what we call positive or negative divergence. So let's take a look at a couple of examples of what's going on right here. Firstly, number one, if we take a look here on the euro US dollar, we've seen the market sell off at the top right here. How do we know that? All right, let's just look at divergence. Now, let me go ahead and pull up a 4 hour. All right, here's a 4 hour. So on the 4 hour, if you look at the 4 hour, we're looking at the market creating, I'm going to try and compress it so everyone can see what's going on here. We can see that the market's created this wave 1, 2, 3, 4, and now we've gone to what I like to call my fifth wave completion. So which means that the euro should be bouncing back up. So we should be thinking bullish on the euro, right? Now, I want to go in and just make sure everyone understands. This is a 4-hour time frame. It's giving us a long-term perspective of what the market's going to do. So, and some might say, well, that looks like it's midterm. Oh, it doesn't really matter. Long-term, midterm, call it what you want, right? So maybe the long-term trend is always down. Right now, it's bearish long-term. So the midterm direction is going to be bullish. And that doesn't mean that the short-term will be bullish too, all right? So we got to go dig down into the details and take a look at the short-term trades or these opportunities and see if it lines up with the midterm direction. Let's go ahead and dig into that. So now that I understand the midterm direction, which is going to be bullish, I've also gone ahead and looked at the last or the latest swing that we have right here, which is this one going up here, targeting this level up here at the top. So I'm looking for price to go to around about, let's call it, what number is that? It looks like it's 1.1315. So we're looking for the euro US dollar to be midterm bullish all the way up to 1.1315. Now, in the short term, this is where we're going to go down to the 1 hour time frame. Let's take a look at the 1 hour time frame right here. What do I see here on the chart? You see, we're talking about divergence again. If you look here on the oscillator, notice that the oscillator is moving down. You see how it peaked there? And then it created another lower peak. So we've seen momentum pushing lower. And notice right here, we had price creating a high and then another high. So we had price moving bullish while the oscillator is moving bearish. Now, that's not all we're going to look for right here. What we also want to look for is, where is this happening? What is the content of the market, right? Where are we with inside the content of the market? And so if we go to the chart and you go ahead and take a look over here, look at that resistance right here. Now, let me go ahead and just state a little disclaimer here. Traders, we're speculating on the market, which means that we're not going to be right all the time. But what we are looking for is high probability trade opportunities. And how do we define high trading opportunities? We define that by looking for evidence that could support our decision whether we want to buy or sell a currency pair. And so this is exactly what it is. We use things that we've used in the past that has been successful over time. Every time we see these things happening, we use those tools that are available to us to identify the opportunity. This is why I will take an experienced trader over an educated trader. I understand that education is important, but what's more important is experience, because through experience, you are educated a lot more about what the live market tells you. Now, again, education is important. I'm not taking that away, but I'm going to say that experience is very important too. And that's the reason why following a mentor like Nick and his team that are educated in the market, that have experience in the market. You can leverage off that if you don't have the experience. Also, you can follow my channel as well, FX Big Dog. Go to my channel, FX Big Dog, as well, and I do go ahead and post content on that as well as we talk about the markets. Every video I put out there is going to give you some sort of education about what I've experienced and what's good for me. Now, following a mentor is important. Having a good mentor to follow, and that's why you should gravitate towards these the education that's been provided to you. Grab that, all right, especially if it comes from an educated trader. So the technical for me right now on a 1 hour time frame is showing the divergence here, all right? So we're getting divergence here, so which means that traders that going into the news this afternoon at 2 p.m. today, when the Feds raise the rates 25 basis points, I don't think we're going to get a shock in them raising up 50 basis points. But when we get that increase, when we get the news coming out this afternoon, it's going to be interesting to see where this divergence, this negative divergence, holds and actually pushes price back down to the support right here, or do we see a breakout? Okay. Again, if you trade that bearish move down south right here, it's just going to be a very short-term move because the midterm direction for the euro is setting up to go bullish, and we're chasing after 1.1315. All right, so the long-term direction is still 1.13. Now, let's go ahead and take a look at another trade, another opportunity here outside, and that is this right here. This is why, again, divergence is really, really cool. Check out Aussie CAD. Aussie CAD right here is showing us, this is what's so important about using divergence. We got a wave 1, wave 2. Now price goes ahead and completes this big bearish move to the downside. But take a look right here. Not only does it go all the way down here, but it creates a little wave here. All right, take a look here. See how the market created a little dip right here? So it created a lower low. But look at the momentum. Momentum's pushing north. All right, so with price pushing lower, but momentum now pushing higher, okay, we now have positive divergence. So when you're looking for a trade opportunity and you see this happening with the markets completing a third wave or a fifth wave move, you should start thinking bullish. Now, if we go down to the lower time frame, let's just take a look and see what's going here, going up, or at least what's going on here. On the lower time frame, I've gone ahead and put in this first swing. Maybe I should go to a 15-minute time frame. Yeah. All right, we can see this a lot better. There we go. So on the 15-minute time frame, we do see that price created this first wave. We've come all the way up here to the 1.618 right here. And now we're seeing the market continue to push north. So what are we thinking? Well, the one thing we know for sure right here is that we should be heading into a correction move. After the market goes ahead and takes out the 1.27 right here, price is going to correct itself. Whether it's going to be a very short retracement right here, or whether it's going to be a deeper retracement and then a rally. But what is due here is retracement. Now let's go back to divergence again. Now, if we look at our oscillator down below right here, we're not seeing anything right now confirming any sort of divergence. All right. So which means, traders, that if you want to trade, if you want to look for an opportunity, now it doesn't mean it's going to happen. It means that if it happens, this is what we look for. If we see price doing something like this, and it creates a high and a higher high, and we see the oscillator do this, then once the market creates that new high right here, it'll be time to start looking for that short-term dip. Now, again, we're on a 15-minute time frame. I want to be clear with everyone. We're on a 15-minute time frame, which means, traders, that if you're trading off a 15-minute time frame, we're trading intraday. We are trading intraday, which means that if you're trading intraday, it's short-term profit opportunities you're looking for. You're looking to do quick in and out trades. That's about it. If you said, big dog, I'm a long-term, or at least I'm going to say long-term. If I'm a long-term trader, then certainly looking at a 15-minute time frame is not going to help you. You're going to go to a 2-hour, 4-hour time frame, maybe even a daily time frame, and look for your opportunities there.
If you're an aspiring technical day trader or swing trader when it comes to Forex, we've got something cool completely free for you. We're going to be handing out our technical analysis handbook, which comes with tons of strategies, techniques, entries, exits for you to check out and to try in your trading on a demo account, see if they work for you.
All you have to do is use the link down below in the description.
Send the word handbook to our team on Telegram and we'll send you a free copy. Again, all you got to do, swipe up, send the word handbook to our team and we'll send you a copy of our technical analysis handbook completely free.